There's an asset called Alameda that had a relationship with FTX, and that asset apparently got a bit too much value, and it's created a liquidity problem for Sam's empire. And it may be the case, that, and more will be discovered soon, that he's insolvent and as a result requires a bailout or acquisition, basically a shotgun wedding to continue operations. And if he doesn't get that bailout, that there's a good possibility that his FTX will go out of business. It'll get liquidated. Much in these things tends to get discovered. So Binance has made an offer. They've signed a non-binding letter of intent based upon due diligence. And as due diligence is done, oftentimes things are discovered, and uncomfortable things, especially the relationship, financially speaking, of the founders to the entities, as well as how funds were used and how much risk exists within the entities. There is a non-zero probability that the acquisition proposal that Binance has put on the table to bail out FTX, to acquire it, will not succeed because it will fail due diligence. This is often the case in many distressed assets. When people look at them, they discover that they're far more distressed than they thought. If that's the case, because of the size and scale of FTX, it's very likely that that will cascade through the cryptocurrency market. As members of the broader cryptocurrency space, this will likely cause issues for all of us. In particular, there is the case that FTX has been lobbying very heavily in Washington, D.C. Their failure could change the political landscape in unpredictable ways. The issues here are that should we see more systemic failures, there could be a belief for more regulatory scrutiny or more draconian laws to be passed to enable that scrutiny. The failure of FTX could result in that, which could in turn more badly damage the industry, and in many cases offshore the American cryptocurrency industry. So this is not a minor event. This could become a very significant event, and it's the last in a series of failures that we saw started by Luna. Luna led to Celsius and other such things, and now we're here. The majority of tech stocks in the United States and abroad are significantly down. In some cases, many are over 90% down, which is quite sad, given that they had enormous valuations just a few months ago in some cases. And so the crypto industry is just a microcosm of a macro trend that we've seen over the last few years of rampant asset inflation. So it's hard to know what's going to happen next. If the Binance acquisition goes through, there is a possibility that the markets could stabilize and that things will look good, or at least calm, and we can move on and continue to heal as we were doing before this event. If the acquisition fails, there is a possibility that a series of cascading failures will occur. And because of a lack of transparency, it is very difficult to know how deep these tentacles go. And it's entirely possible that other firms that were reliant upon FTX could also fail, similar to a 2008 financial crisis style event after the fail of Lehman Brothers and the threat of the failure of AIG.